Securities offered through Cambridge Investment Research Incorporated, a broker-dealer, member FINRA, SIPC. Advisory services through Cambridge Investment Research Advisors Incorporated, a registered investment advisor. Cambridge and Clear Vista Financial are not affiliated. Discussions in this show should not be construed as specific recommendations or investment advice. Always consult with your investment professional before making important investment decisions.
You are listening to the Spend Life Well Show with Kingdom Advisor Mark Trice and Jesse Hamilton. Mark and Jesse are passionate about seeing you spend life well. If you want to save for and invest in the future, then this show is for you. Call now and join the conversation with your financial questions. 512-452-1120. 512-452-1120. Mark and Jesse will answer your questions and discuss practical financial principles based on a foundation of biblical wisdom. So if you're ready to quit worrying about your finances and begin to spend life well, then call 512-452-1120. And let's meet your host, Mark Trice and Jesse Hamilton.
Hi, I'm Certified Kingdom Advisor Mark Trice, and I want to welcome you to the Spend Life Well Show, where we apply biblical wisdom to your financial journey. I'm joined each week, as I am every week, in the studio with my co-host and fellow financial professional, Jesse Hamilton.
Hey, everybody. Welcome to the show.
So today we're going to be talking about whether is a financial advisor worth it, and we're going to be answering questions about how do you create a long-term financial strategy that's unique to you, how do you avoid taxes, and more importantly, how do you put those emotional guardrails on your financial planning, and really will hopefully answer for you, when is it time to start working with an advisor? So this week, our verse comes from Proverbs. There's so many great verses in Proverbs about financial wisdom. Proverbs 15:22, which says, "Plans fail for a lack of counsel, but with many advisors, they succeed."
Mm-hmm.
So Jesse, tell them they can call us during the week, right?
Sure, you can. Questions. Call us anytime during the week. We'd love to have a conversation about whatever questions you might have. That phone number is 800-491-4508.
Yeah, that's 800-491-4508.
Mm-hmm.
Jesse, it's been a really busy time in
the market. Has.
Lots of stuff going on.
So much volatility lately.
And it's one of those things where you're starting to see the financial talking heads on television and radio start mentioning the R word. And that stands for recession. Yes.
Yep.
Now, I'm trained as an economist in my background before I became a financial advisor. And so I'm a little bit geeky when it comes to numbers and things. And I like to look at the GDP and the employment or the unemployment reports and things like that. But we saw in the first quarter that the gross domestic product, that's the kind of the measure of how healthy our economy is, we saw it decline, and that's a contraction in the economy. And it declined by 1.4%. Now, if I'm not mistaken, well, it's typical to have a down quarter.
Okay.
But the thing that you want to be paying attention to, and we won't really know this for sure until data is released for the second quarter sometime in July, but you don't want to see 2 quarters in a row of negative economic decline, because that is an economist metric for determining whether or not our country is in an economic recession. So we've got 1 quarter negative returns. Will the second quarter hold that? I don't know.
We'll have to wait till July to find out.
That's right. But there's a lot of things going on that we think are creating a drag on the economy. And we should do like Sesame Street, Jesse, or like today's program is sponsored by the letter I, and that's inflation, right?
Yep.
Inflation is really rearing its head, has been for the last year or so.
I don't think we had to say that for our listeners to know what's going on with inflation.
No,
you go out every day and your grocery bill is going to be more. We're going to talk later about gas prices. It's just, it's very expensive.
I mean, I got 6 people in my household, and I'm noticing
it's a lot of mouths to feed.
It is, and we're spending on average about $200 more a month. $200 more a month, and that is, something that's tough for a lot of people to absorb.
Yes, it is.
And I try to lock the pantry at night, but I about midnight or so, I'll hear the door creak in there, and I try to jump out of bed and go catch the villain who's
The
stealing
thief.
food late at night, and they're gone. They're like a thief in the night, right? And but I know that our grocery costs have gone up quite significantly. Probably our listeners are seeing the same thing. Maybe you are. We'd love to hear from you. You can call us anytime during the week. Our answering service is on 24/7. It's 800-491-4508. Or you can just visit us and send us a message. You can send us a message by going to our website, which is spendlifewell.com. That's spendlifewell.com, or send us an email. It's possible if we don't get a chance to answer that week, we might pick your message or question and we'll respond to it on an upcoming show. So a
Yeah, we
couple of
love
different
doing
ways
that.
there. And Jesse, every month we've got some special program on the first Saturday of the month. Is that right?
Yeah, we do a monthly market update where we're going to go through some charts and some visual representations of what's going on in the market. So for those of you that like to really understand on a deeper level what's going on, we encourage you to join that. You can, once again, our website, spendlifewell.com, there's going to be a link. You can join that webinar. You can get up, sit on the couch and pull up the smartphone or the laptop and just listen in and see what we have to say. Maybe you can learn something about the financial markets.
We always have a lot of clients participate in that because it's kind of our way to update them. Okay, what's going on? What's
Yeah,
going
the
on with your
clients love hearing
portfolios?
about it.
We're not actually able to tell them, hey, your portfolio's up or down in any direction, but we're
Mhm.
telling what's happening. And for many folks, it just makes sense so that they can take action. If they're not working with us, they can talk to their financial advisor and they can take action on certain things so that they're
Mhm.
able to take control of what's going on, because a lot
Yes.
of things are happening. We got inflation. Oh, by the way, we've got rising interest rates. And so, the thing is that a lot of people think that the Federal Reserve is going to step in and rescue this stock market, right?
And they think that they have control to do that. They have
Yeah,
a
and
they have just two tools, right?
right, they can raise interest rates, they can buy and sell bonds.
Mhm.
And buying bonds and lowering interest rates have been what they've been doing for the last decade, and those tools have run out. But there was an article in Bloomberg this last week, Jesse, because a lot of listeners may be concerned, and just last week, the S&P 500 touched that bear market threshold, minus 20% from the peak down to where the current level was. Now it's come
It's
back up
come
just a
back from
little
then.
bit since then, but so we didn't close below 20% off the high, but we touched it. It's like we're poking the bear.
Yeah.
We're wanting to hopefully not disturb the bear, but if you poke a sleeping bear, you might anger the bear. And the Fed has always been the rescue for whenever there's a pullback in the market, and that's not
Mhm.
the way you're supposed to operate, but that's what they've done. And you've seen it in the past decade or so that the Federal Reserve, when they do some type of quantitative tightening, whether they're raising interest rates or they're selling bonds back off their balance sheet, the stock market throws a little temper tantrum.
Yep.
And over the last 10 years or so, the Federal Reserve chairman, and all the way from Bernanke to Yellen to now Jerome Powell, have always backed off and said, "Oh, they didn't say that like this. I'm being facetious here, but they said, "Oh, we're so sorry, Mr. Market. We'll lower those interest rates, or we'll stop that quantitative tightening process, and maybe we'll have another quantitative easing type process to make it more easy for you to have liquidity in the system." And they're not going to do that this time. They cannot. In fact, they just released minutes from the May meeting just a few days ago, or actually today, when we were doing this show. And it showed that they were committed to raising interest rates, the federal funds overnight rates, to at least two more times, a half a point each time, both in June and July or August. I can't remember which month they meet in, but they're committed to it. And on June 1st, they're going to start reducing the balance sheet. Now, their minutes said that they were doing this in a little bit of a passive way. All they're doing is they're letting some of those bonds mature and not
Not
trying
buying
to
new ones.
sell and not buying new ones. Okay,
Mhm.
so it's a little bit deceptive, and they're really not. They're going to ease into it a little bit. It sounds like, because they don't want to upset the stock market. They don't want to poke the bear, right? But we've seen other indexes down by more than 30% from the peak. I'm thinking about the NASDAQ, Jesse.
Yeah, the Nasdaq tech companies.
The tech companies that did so well last year and the year before.
Yeah, Mark, I get a bunch of friends that ask me, why does a federal funds rate change affect my life? And my answer to them is that it trickles down to every part of your life, whether you're borrowing money or you're spending more at the store. The companies that you buy the products from, I mean, we all carry these things around, right? I'm holding my phone.
Right.
These tech companies, they borrow so much money that a half percentage point change across multi-billions of dollars is expensive.
Well, what about if you're just wanting to buy a new house?
Yeah,
Yeah.
it's totally changing the housing market because mortgages are, I don't know, well over 5% for anybody with decent
6.2.
Yeah,
I
if you
checked
have,
the other
that's
day.
if you have great credit.
That's right. And we need to have a realtor on here, because I was doing the calculations when I was an economist. I was working on some research on housing affordability,
Mhm.
and I looked at the numbers for Central Texas, primarily in the Austin metro area, and I was looking at the numbers, and for the average household income, the amount of home that they can afford with a mortgage has gone down tremendously because of those rising interest rates. And
And
that's
if I
just
remember
assuming,
correctly,
yeah.
that home price has dropped below the median home price.
Well, that's what I'm saying is the median home price. I'm just making up numbers here, so don't listeners, please don't quote me. Let's just say the average home price in Austin, Texas is $300,000, and that means that if the market is affordable for most buyers, that at least half of the population needs to have a median household income of at least $60,000-$70,000 and no other debt.
Yeah.
And so it is that number used to be that average household in the Austin area when interest rates were low, they were around the upper twos, low threes. That person, the mortgage payment for that particular person might be $1,200 a month. Okay, this is not including taxes and insurance and stuff like that. Just principal and interest. Well, since interest rates have gone up to 6.2 or even higher, the amount of that monthly mortgage payment for principal interest is now over $1,800, and that changes the affordability calculations that a lender will allow someone to borrow.
Mm-hmm.
And so, what was affordable 6 months ago for the average household in Austin, Texas, is no longer affordable. And the result, Jesse, is no, we're not going to have the housing market collapse. I hope not. That's not the case. But I think what you'll see is a plateauing of home prices. And you might even see those home prices begin to creep down a little bit, because suddenly, and I've got this anecdotal evidence from some realtors I've talked to and stuff like that. So anecdotally, that means there's going to be fewer people competing for that home, because this time last year it was like, if you didn't put an offer on that home within 10 minutes of that listing coming online, you weren't going to get a chance, and you were
I
usually
lived through
competing.
it.
Oh yeah, you did yourself.
I did
Yeah.
that experience myself. It was not fun.
Yeah, and you guys lost out on a lot of
Mm-hmm.
potential properties, and I think y'all found the right one eventually. God
Yeah, we
intervened
did.
in there, and patience, Jesse. I'll
Mm-hmm.
bring you the right house. But a lot of people, were having to compete. Now we think that's going to cool down, and so in some cases, a year ago, houses were being snapped up, and you had contracts within the same day. Now it's taking a few more days for that to be under contract, and the offers are not as robust as they once were. So, lots of things are going there. So that Fed overnight funds rate, it trickles down. You're right.
Yes, it does.
So
And
it
just a
negatively
quick
impacts. tech companies, like you said, because it affects their price to
Absolutely.
earnings ratio. It's
hmm
mortgages, credit cards, car loans.
All these things that people use every day. I mean, our lives are completely intertwined with technology, so it's going
Yeah,
to affect you.
yeah. You were about to say something, Jesse, and I interrupt you.
Oh, that's okay. I was just going to say that people who don't really understand what happened in 2008 are convinced that that will happen again. But in 2008, that was just a waterfall effect of derivative products that caused a major meltdown in the financial system. And not to
Yeah.
say that we're in any healthier of a market now, but it's a very different situation.
Yeah, I'd say our financial system is much healthier than it was then. The housing market, it's not at risk for that. I mean, in fact, there's one of the things, and this is one of the reasons that I don't think the housing market will collapse like it did in 2008-9, is there is such a shortage in inventory
hmm
around the country. We were talking to some folks the other day, some of our other fellow financial advisors, and they were talking about we're so far behind in the production of new inventory, new homes, new apartments, that it'll take us years to catch up with just the current demand. And so that's why I don't think that the housing market's going to collapse. It may cool off, but
Likely.
not hopefully not be like a situation in 2008 and 2009. Texas was a little bit more insulated from those things versus states where it was very, very easy to finance 100% and you could have multiple mortgages and no problem. Didn't need to prove that you had income. It was crazy during that time. So uh, I don't think that's the case. But when we come back in just a moment, we'll talk a little bit more about the news and want to get into this whole notion of, is a financial advisor really worth it? Is a financial advisor really worth it? We'll show you some research that we've seen and so forth to talk about that. But you can call us anytime throughout the week, 800-491-4508. That's 800-491-4508. Or just visit us on the web, spendlifewell.com. That's spendlifewell.com. You can see stories about us, our bios. You can register for upcoming informative webinars we have every month.
hmm
And we hope you take advantage of some of those things. But just come visit us. When we come back, we'll talk about the value of a financial advisor. You're listening to the Spend Life Well Show.
All right, everybody, welcome back to the Spend Life Well Show. I'm financial professional Jesse Hamilton, and I'm joined by certified Kingdom advisor Mark Trice. Mark, let's kick it off by just talking about gas prices.
Every time my wife goes and fills up her large vehicle, she sends me a text and says, "I just spend over $100 in filling up the tank." And I go, duh, yeah.
I have a group chat with two of my college buddies, and about once a week, we'll try to top who spends the most on a tank of gas in their trucks.
Yeah.
And they both have bigger trucks than I do, so I never win the price battle. But I think that's a good thing, right?
Yeah, but I tell you, Jesse, this is really impacting folks' pocketbooks in a
Yes,
very
it
negative
is.
way.
I
I
think
think I read this
Go
week,
ahead.
what was the average price of nationally for a gallon of gas?
I read 423,
$4.23. I've seen
and
prices other places higher. California, of course, they have tons of taxes, so
I
it's well
actually
over
spent
$6.
last weekend out in California visiting some family and celebrating a wedding. But I would drive by the gas stations and see $5 and $6 gas.
Wow. And then diesel here in Texas is over $5.50. And you think about it, that means that a trucker with an 18-wheeler, and I hope I'm getting this right, but a trucker with an 18-wheeler is probably spending close to $1,000 for every time they fill up.
hmm
And
Likely.
that's impacting a lot of people, and it's just making it hard just to get to work.
Oh yeah.
Right in time for the summer vacation season when everybody wants to travel.
hmm
I mean, we had to evaluate ourselves, whether or not where we were going to go, and if we could go anywhere, and how much that was going to cost. And I know that's impacting a lot of people, and everybody's so, we've been pent up for 2 years, and there's not really any signs that we're going to have Omicron or Delta variant pop up in the summertime. Hopefully not. We got monkeypox going around, but that's a whole different story. So people are just anxious and antsy just to get out. But when you're having to pay twice as much for a tank of gas as you did a year and a half, 2 years ago. And you're paying 20, 30% more for that bag of groceries. It really begins to wear on folks' budgets. And
Well, it just changes everything because normally people try to save money by not flying. So they'll do a road trip, right? And they'll pack everybody in the car. But when gas costs twice as much, that's probably not a viable option anymore for the summer.
No,
I
it's
have
not.
no idea if airline prices are going to keep ratcheting up at the same rate that fuel prices are. I would expect them to.
Yeah.
But just like we were talking about in the earlier session, with higher interest rates, even the airlines are going to have to borrow more money at a higher rate to pay for gas.
Yeah, and you know that's coming. And airlines are pretty sophisticated about buying futures and stuff
Very
like that. But
sophisticated, yeah.
right now it looks like the future is up. And that's the price of gasoline, whether it be aviation fuel or unleaded. And so, normally a lot of folks, if they're taking a vacation, they're using their superfluous income, right? And hopefully they're not charging, although we're seeing a lot of data where credit card balances are rising very quickly. That's a little concerning. But, you might take a vacation with your superfluous income, or maybe you were setting aside all year so that you could take the family to Disney or to the beach or whatever. And you're having to use that now just to get to work and to pay and buy groceries. That's tough, folks. And we understand that's going on. But, we did in one show a few months ago, we talked about some of the optimal times to get gas. And you remember, Jesse, I think it was fill up your tank on Monday.
Monday.
Early in the morning, right?
Early in the morning. Yeah. I don't know why that is. I guess
Well,
people
I
don't
think
like
the
to get up early, and they shift the price throughout the day. Probably during your lunch break, it's going to be the most, or maybe 5 o'clock after work.
Because they generally raise prices throughout the day, and the beginning of the week is usually the cheapest time of the week. Well, I've started filling up on Mondays just to see, but I guess I've got to drive back by the gas station and see, is it higher on Tuesday, right? But we are seeing those prices go up, and that's really affecting folks. So, we're prayerful that this inflation will settle down, but we're going to have to do a lot to see that go down, and that means, according to the Federal Reserve in their minutes, that means they're going to have to raise interest rates, which is going to impact the demand. In other words, not going to spend as much, and they're hoping that inflation will calm down. Now, one of the things that, and I didn't quite understand it because they didn't really explain it very well, but it seemed to me that the Biden administration was claiming that having to pay a lot of higher prices, high gas prices, was good for the country because it would force us to buy an electric vehicle or force us to change our lifestyles. But, Jesse, you and I were talking about this today. We
were. I've been having this debate with my wife, not debate, but discussion about, is it even realistic? And we've come to the conclusion that it's just not quite there yet. We would love to have an electric vehicle, but the ones that are affordable don't have the requirements and the performance that we need to actually get around. And the ones that do have the performance are just too expensive still.
Yeah, and I don't think, we're talking about substitution of goods and things like that. I don't think that if gas prices get up to $6 a gallon, which is very possible, I'm not saying it's likely, but it is possible this summer sometime, I don't think that the notion of what the administration in Washington is telling us is that suddenly when it gets to $6 a gallon, we're going to say, oh, I'll buy an electric car.
Yeah, easy. Well, go out and buy a $60,000 car.
Yeah. It doesn't happen that way. And people are not going to abandon their vehicle or get a new vehicle just because the price of gas is over $6. And maybe at some point, maybe when you're thinking about purchasing one, but somebody, I forgot, how do they make the energy for these cars? Jesse, are you familiar with this?
Got to make them somehow.
It's a complex process. So they have to use fossil fuels, some wind, maybe some solar, to generate enough electricity to charge the batteries, which actually is, in some cases, more damaging for the environment. So it's one of those conundrums, Jesse, that I know for understand.
A fact in our town here in Central Texas, if you're high enough out, you can look out on the horizon and see this big coal burning building about 20 miles away.
Right.
And it burns coal to fuel the city.
Right. Well, I mean, they have to generate the electricity somehow,
Mm-hmm.
and you got to charge the batteries. The batteries are expensive. The elements that are required to make the batteries are expensive and going up. Commodities that are going up, and
Yep.
so I think the big miss here is that Americans are suddenly going to change their consuming behavior because gas gets up above $6 an hour or dollar. Excuse me.
Mm-hmm.
I remember when I made $6 an hour, but $6 a gallon. Oh my goodness, I couldn't imagine that if we're getting paid $6 an hour. So
So do you think people are going to just stay home more this
I
summer?
think they will. I think they'll travel less. They'll only go to work or where they have to go.
Mm-hmm.
We'll think about, okay, we're not gonna, we live 20 miles outside of town, and so we're just not gonna jump in the car and go to the store 3 times a day. We're gonna
Yeah.
consolidate trips and things like that. One of the things that my graduating senior, my daughter who's graduated from high school last week, I heard her complaining. She goes, "I can't afford the gas," and I just want to chuckle. It's like, welcome to adulthood, my
Welcome.
child. Welcome to adulthood. No, and she's really feeling the pinch. She's got to drive to her job that she has, and she gets paid good money at this particular place, but still, it's a lot of it's being eaten up by just fuel costs, and it's really impacting families around the country. Speaking of things that are going on here soon, we talked about our webinars that we have. We have one at the first of every month. We also have one
Mm-hmm.
the third Tuesday of the month and on various topics. You can find those at spendlifewell.com, spendlifewell.com. This is a very special weekend, Jesse, and it's Memorial Day weekend.
Yes.
And we just do not want to forget our servicemen and women that made the ultimate sacrifice and giving of their lives in service to our country, and the freedoms that we enjoy and participate in. We just have to give a great thanks. We want to take the time this weekend just to pause, remember those lives that were lost in defending the freedoms that we have. We may disagree on a lot of stuff, folks, and I hope we can set aside those things. I know we've had a lot of violence going on in the last few weeks around the country, and it's really disheartening to see those things. But as you're out enjoying the weekend, maybe you've got a long weekend because you got a Memorial Day off, just remember the ultimate price that was paid and the sacrifice that was made by our servicemen and women that gave their lives in protection of our freedoms in our country. I just want to say thank you for all you out there. Of course, we always appreciate veterans all the time, but this weekend's very special as we celebrate and remember those servicemen and women that lost their lives in defense of our country.
Yes,
So,
absolutely.
Jesse,
A lot of people just don't recognize the fact that you don't just get a day off. We need to take time to remember the reason for the day off and just be reverent and maybe take a moment and sit at home and be quiet and think about it or talk about it with your family. How has it impacted you? And just remember those that have lost their lives.
So Jesse, let's shift gears for a moment because we can
Okay.
talk about bad news and stuff and all those things, and I don't want to get the listeners down. Let's think about some positive things. And one of the things that we really wanted to talk about today was, is a financial advisor worth it?
I know a
And
lot of people have strong opinions one way or the other about this, but
yeah,
we
and
kind
so
of wanted to have a discussion.
yeah, we want to have a discussion about that, and we'll be happy to talk to you. You can give us a call anytime during the week at 800-491-4508. That's 800-491-4508. And, going back to our verse for this week, Jesse, Proverbs 15:22,
Hmm.
plans fail for the lack of counsel, but with many advisors, they succeed. And, even financial advisors need financial advisors.
Yes.
And because we have our view of the world and we look at everything through the biblical worldview and try to get our guidance and wisdom from the Bible on how to manage our finances. And believe me, there's, Jesse, over 2,000 verses in Scripture
That's
that
right.
are pertaining to possessions and wealth.
Hmm.
I mean, God knew we were going to have a trouble with this, so He really decided that he was going to provide a lot of guidance for us. And one of the things I refer to that verse a lot of times because, people need advisors. Financial advisors need financial advisors. But, I have other advisors. I talk to insurance experts about my insurance needs. I talk to mortgage brokers about how to get the cheapest rate on my mortgage, different things like that. And it's important that you surround yourself with competent advisors. And I'm not talking about just about financial advisors, but advisors that are going to help you navigate different times of your life and help you prepare for the future.
Right.
Um,
We have
go ahead.
We have a spectrum of all different types of people. Obviously, we encourage everyone to work with an advisor. Some people come to us and say, handle everything. You can tell me summaries. I want to know. Delegators, yes. And then we have other people that come in and they want to debate everything we say. And we're happy to deal with both kinds of people because we want everyone to feel like they're getting what they deserve. And you're not trying to sway somebody one way or the other. We're just here to help make good decisions. That's what we're paid to do.
Yeah. And so surrounding yourself with trusted advisors is very important. But is a financial advisor worth it? Because we get a lot of people that come to our seminars and things, and you can tell they're a do-it-yourselfer, and they're there to gather as much information, and then they want to go execute and implement that on their own, and that's fine. We're like, go for it, man. We hope that you're blessed and you're successful in those things. Because not everybody can work with a financial advisor. Some folks just need to work by themselves. We think that it's valuable to work with a financial advisor. In fact, there was a Vanguard study that was released recently, Jesse, and Vanguard is a financial company. They do have all sorts of different types of products and things. We're not endorsing them, but they did some research, and I thought it was very interesting. And that study found that on average, a hypothetical $500,000 investment would grow to over $3.4 million under the care of an advisor over 25 years. Okay? Now compare that to where people manage it themselves over that same period. The average portfolio worth was supposed to be about $1.69 million, or that's about 50% less than if the person had worked with an advisor. Now, this is their research. I don't know the methodology there for that. I'd like to think I'm worth that much, but let's be honest. There's lots of different types of advisors out there, and now their assumptions were that an advisor managed portfolio would average an 8% annualized growth over a 25-year period compared to a 5% average annual growth from a self-managed portfolio. And they got this research. You can look on Vanguard and find that if you're curious. But that's pretty telling that much, because I think what happens is with a lot of advisors, and in the next segment we'll talk about things you need to look for to find the right advisors, whether it be financial advisors or attorneys, whatever. But I think the big thing is that financial advisors can help you manage your emotions. We've had a lot of emotions going on right now in the last several weeks. Last week was the 7th week in a row of declines in the stock market. A lot of emotions are running high. And I think that when people do it themselves, they tend to respond in an emotional way to events that are going on around them. But when we come back, Jesse, I want to delve into this a little further because I think it's important people understand the best ways to find an advisor. So, folks, you are listening to the Spend Life Well Show. Your host, Mark Trice and Jesse Hamilton. We will be right back in just a moment. Welcome, everyone. I'm Certified Kingdom Advisor Mark Trice. Thank you for joining us and listening to the Spend Life Well Show today, where we apply biblical wisdom to your financial journey. We've been talking about, Jesse, in the previous segments of the show, talking about, stuff that's been going on in the news. But last segment, we were talking about, how do you find a trusted advisor? And is a financial advisor worth it? We cited a study from Vanguard that shows that, yes, there is value in having that. But I think you brought up something in the break I think it's worth sharing with listeners out there. And that is, a financial advisor can give you confidence,
Yeah,
right?
this study, I don't know where they got their data. You can go and find it on Vanguard if you want to read about it. But they said that 79% of those who use a financial advisor report feeling more confident in achieving their goals in retirement.
Yeah.
And I mean, Mark, we've seen that play out in the last week. We met with several clients this week that come to us, and they told us that they've inspired confidence. We've inspired confidence just by talking about them walking through their financial plans and their retirement planning.
Yeah,
It builds confidence in people to know that we can't predict the future, but we can plan for it.
that's right. And the thing is, we sometimes nickname our financial plans as a financial readiness plan because your financial future is not a straight line upward
No,
or a hockey stick upward.
sure would be
It
great if
is,
it was.
yeah, it'd be nice, and our job would be really easy. But when the client says that they have more confidence, that's not saying that everything is smooth and so forth. They just realize that they have a plan, and working with a financial advisor can help you do that when you're working with someone. And so that's a good reason to remember with folks. And so let's, the financial advisor is really a facilitator, right? A trusted advisor.
Yes.
It kind of ties to gaining more confidence in what you're doing and that you're preparing for the future. There's a lot of ups and downs and things, and so you just have to be able to respond to those situations because I mean, gosh, I've been thinking of friends in the last week. Some of their plans have gotten uprooted because of illness and
Hmm.
things of that nature, and so they're having to adapt and adjust. And so that's why we refer to planning as a financial readiness, being ready, having the goal in mind, having the objective ahead, whether that be retirement, saving for college, or whatever. But it is the ability and the confidence to know that you can respond to different situations as situations change.
Hmm.
But
And we
that
present,
trusted advisor is really a facilitator, right? I mean,
right.
it's a facilitator in the decision making process.
Yeah, that's what I'm getting across to. But we also present our clients living documents. We don't provide static documents.
That's right. I mean, that's one of the things. And I was telling, because I had a financial advisor before I became a financial advisor. And what I realized later on is that I got a nice leather bound notebook from that financial advisor, and later on I realized that, well, you know what, it was out of date by the time I got in the car
Mm.
in the parking lot there. So you want to make sure that you've got that facilitator, if you will, to help you make those decisions. You want to make sure that they're professional and that they have the expertise for the things that you're asking them about, whether that be an attorney, a financial advisor, a banker. And you want to make sure, especially for listeners of this program, you want to make sure that they're integrating the appropriate biblical principles into your financial plan. So, Jesse talked about having confidence. They're also encouragers, right? You're encouraging your clients to implement those decisions that they've made. Also, too, Jesse, sometimes I think that, a trusted financial advisor can be a contributor to peace of mind. We
Hmm.
talked about those things because you were giving them confidence or whatever, or they felt confident with what they were doing because they had a plan. But that peace of mind is important when markets are tough or rocky, and you know that you're still moving towards your goals, right?
Right. We do that a lot by just educating people. That's one of our core values here is education.
Yeah,
And people can make their own decisions because they're educated, and we teach them what they need to know.
that's right. And that's so important when you're trying to apply the wisdom of God's truth, right? The trusted advisor ultimately helps their clients overcome these economic uncertainties, whether it be recession, whether it be inflation, um, and that's really important. We don't want to put our trust. We don't want to put our trust in the size of our bank account.
Hmm.
We ultimately know that as a believer and follower of Jesus Christ, we know that this world is temporary, right?
Oh yeah.
That our bank accounts are a temporal thing. They're a worldly thing. And we want to make sure that we put our trust in Jesus. And that's so important. And that's why we think it's so important. And there's a number of certified Kingdom advisors in Central Texas around the country. I mean, I forgot how many there were now around the country, about 1,800 or so, that have earned that certified Kingdom advisor designation. Folks, these are folks that have been trained in biblical wisdom and the application of that biblical wisdom to your financial life. And that's why we do the Spend Life Well show, is to help people apply that, because God has given us a whole lot of instruction through that. And so, I think of some of the verses that are out there. I was thinking about Ephesians 4. I was thinking about Matthew, of course, Matthew 28 with the Great Commission, all these different things that are important with that. But Jesse, at some point, investors face the same dilemma, right?
Right. Do you do it yourself, or do you hire somebody to do it for you?
Right. And
not
some
for you, but
people-
to help you.
Yeah. Some people prefer to do it themselves,
Mhm.
and that's fine. But you have to spend a lot of time understanding what it is you're investing in, understanding the risks that are associated with it. And a lot of times, Jesse, we see people that are extremely talented in doing this. But even those folks typically are saying that they're spending a ton of time
Right.
managing those investments.
The markets are something that are open every business day of the year. And so that's one of the thrilling parts that I love about this job is every day I come to work and there's constant movement in the markets. But if it's not your, 40-hour-a-week job to watch those things, it's going to take up a lot of your time.
Yeah. And a lot of people just want to delegate that because they'd rather not do that. They'd rather spend time with their grandkids or, enjoying retirement. They don't want to do that. And sometimes it's just, you got to admit when you don't have the expertise to handle all the situations. I mean, like we said, we've got financial advisors and we're financial advisors.
Mhm.
I consult with my attorneys on my estate plans and so forth and wills and trusts. I talk to my insurance experts that I like to use on those types of things. But, as an example, Jesse, I was thinking about when I was living in the Northeast for a short period of time. And we were in this great old home. It was built in the early 1920s. And I was watching all these home improvement shows at night, And if you watch enough Fixer Upper, or you watch enough of, Fix That, Fix This shows, you think, well, I can do this, right?
They make it seem like you can do it, yeah.
I mean, they renovate a whole home in under 45 minutes, on the show, right? So, I was going to knock out some walls and open up this floor plan. And that was great. But this home was built in 1920. I was going to knock this wall out. I was going to make it so open because all our rooms were kind of compartmentalized. And so I did this. So I took all the necessary precautions because they watched all the television shows and things. I even Googled and YouTubed a couple of videos and things. So I prepared the environment. I put plastic sheeting up all around the area that I was working because we had a newborn and I didn't want it to be dusty or anything. And so I proceeded with my sledgehammer to knock down the wall. And little did I know that it wasn't drywall I was dealing with. I was dealing with horsehair plaster. And if you've ever dealt with any of our listeners have ever dealt with horsehair plaster from the early part of the 20th century, that is a very fine material, and it is extremely dusty. And Jesse, I kid you not, within 5 minutes of me starting to knock down this wall, it was a beautiful wall, by the way. I'm knocking down this wall. I hear my wife screaming, and she's using my middle name. So there's only two people in the world that use your middle name, Jesse, right? It's your mom and it's your wife if they're really mad at you. All right. So I get my full name used and she wants to know what's going on. And I'm like, I'm all hot and sweaty. I've been knocking down this wall for the last 5 minutes, mind you. And I go out from all the plastic sheeting and stuff. And all over the house, the entire house was a thin layer of white powder everywhere. It looked like somebody had taken a bag of flour and just exploded it all over the room. Okay. So I was in trouble. And it was then that I realized that I'm thinking, oh my gosh, when did they start using asbestos in plaster? And I start to panic. I've got a newborn child. I've got a smaller child then. So, I had to get it all tested and stuff. Thankfully, it did not have asbestos in it, and I just had to vacuum and dust for 3 weeks to get all that horsehair plaster out. But I stopped because it was then that I realized I was above my talent. I was doing something that was above my pay grade, and I determined that it was not worth it for me and my personal marriage and and love
And
life.
family.
Right. It was not worth it for me to do it myself. And I think a lot of times investors that want to do it themselves will start out doing it, and they realize fairly quickly after they've lost a lot of money potentially that maybe this wasn't the smart thing for me to do. You may have been to a workshop that we've done, Jesse, in the past, but I sometimes I've asked, basically the ladies, I say, does your husband have an investment hobby? And I use the word hobby. And every one of them just starts laughing because they think that they're experts in investing. And the fact that they chuckled about that, Jesse, tells you what? Are they really good at it?
No,
No.
it's a hobby.
It's a hobby. And you really don't want to make your financial future a hobby.
Well, yeah,
Right?
I was just thinking about how expensive hobbies can get. That's probably a really expensive hobby if you're not doing it well.
Yeah. And so, we talked about that. We talked about that research that Vanguard did, and it basically was saying that financial advisors can add about 3% in relative return to an individual investor. But your decision, that's great. The return, that's awesome. But your decision to hire a professional shouldn't be only about investments.
Mm-hmm.
You mainly want to hire a professional so it will free up your time to do the things you most love in life. And I say to alleviate stress.
Yeah.
Uh,
Let us handle the
because,
stress.
yeah, I think a lot of people want to hire advisors because they just don't want to have to deal with the stress. And having someone to help them sometimes is very valuable. So,
Yes.
Jesse, I think one of the most important things that people need to realize is they want to work with an advisor that has to follow a fiduciary standard.
Yes.
In other
There's
words,
different standards
yeah.
of
Why
how
don't you
they
cover that real
treat
quick?
you. Well, the fiduciary just means that they're legally obligated to act in the best interest of the client.
That's right. That's
It's
what we
a-
are. That's what we are.
that's a way that they're set up legally. That's where their obligations lie. So that's a very great first question for your advisor if you
Yeah.
want to work with them.
Are you a fiduciary?
Are you a fiduciary?
Right. Because if they say no, that means that they're only adhering to the suitability standard, right?
Right. It's a lower standard of placement.
Well, it means that technically they're not required to. The advice they give you doesn't necessarily have to be in your best interest.
Mm-hmm. Yeah, they
And-
just have to fit your income and demographic information.
Right, and prove that it's suitable. I know in a past show we've talked about that. I won't do it again today. What's suitable? But what's some other questions that we should be that people should be asking if they choose to hire a financial advisor, a legal advisor, whatever.
Mm-hmm.
How
Well,
about
there's tons of great ones. I mean, you could ask them, how do you get paid?
yeah, that's real important because the term financial advisor is run rampant out there, and there are all sorts of people that use the term financial advisor, but that may mean different things to that
Mhm.
person. We have a lot of insurance agents that run around that aren't licensed in any type of securities, but they call themselves financial advisors. And we have to follow a rigid, stringent guidelines to be called a financial advisor. I mean, we're properly licensed, et cetera. So what's another question that folks can ask if they're interviewing advisors?
You might want to dive into, motivations of products. So
Right.
a great question would be, do you earn revenue from anywhere other than me? Something like that.
Yeah, that's a good one because sometimes advisors get paid in different ways, maybe not directly from you. So we encourage folks to look for a fee-only firm. In other words, firms or advisors that generate revenue from fees paid directly by the clients. And those typically have the fewest conflicts of interest, right?
Mm-hmm.
So you also want to think about what their experience is. If you're talking to someone and they say, well, look at my license, I just got it last week, that's probably not someone that I would trust all my money to.
Yeah.
So you want to look for someone that's got a lot of experience, and you want to understand the revenue sources, but you also want to understand what's the all-in cost, because there always seems to be like extra stuff that you forget about, right? Or you didn't know about.
Mm-hmm.
So all these things are real
Definitely.
important, Jesse. As we
Give
wrap
us a
up,
call this week. We'll give you a list of questions to ask your advisor.
yeah, and we can just walk over the phone and do that with you, and reiterate these things. But you can call us anytime, 800-491-4508, 800-491-4508. We thank you for listening to the Spend Life Well show. God willing, we'll be back next week. Visit us on the web at spendlifewell.com, spendlifewell.com. From myself and Jesse, our co-host, we thank you for joining us. Have a great week.